You think you're investing in Bitcoin, but you might be holding something that's secretly eating your money every single day. BTC, BITO, BITX. They sound similar, but they are not the same thing. If you're holding the wrong one, you are literally burning your own capital. Let's cut through the noise and get straight to the truth. Real Bitcoin, or BTC, is simple. You buy it, you own it. There are no middlemen, no hidden fees, no roll costs, and no leverage decay. If Bitcoin's price goes up 40%, your investment goes up 40%. If it crashes, you feel the full impact. It's direct and straightforward. BTC is the only one of these three that truly acts like a long-term asset. It has a fixed, predictable supply, growing global demand, and over a decade of history. If your goal is to hold for the long run and capture the real growth of the network, BTC is the cleanest, most efficient way to do it. It's the baseline, the real deal. Now, let's talk about BITO, the ProShares Bitcoin Strategy ETF. This is where a lot of people get confused. They buy it through their stock brokerage account thinking it's just Bitcoin in the stock market. That is incorrect. BITO does not hold any actual Bitcoin. Instead, it buys Bitcoin futures contracts. And here's the catch. Futures come with a built-in cost, often called a roll cost. Think of it like a subscription fee. Every month, the fund has to sell the expiring contracts and buy new ones for the next month. This process, known as rolling, creates a small but persistent drag on performance. In the short term, like for a day or a week, BITO tracks the price of Bitcoin fairly well. But over the long term, those small roll costs add up, causing BITO to slowly but surely underperform actual BTC. This isn't some market secret. It's just the mechanics of futures-based ETFs. So, if you plan on holding for months or years, BITO is simply a less efficient choice compared to owning actual Bitcoin or a spot Bitcoin ETF. So, who should even consider using BITO? It really only makes sense in a few specific scenarios. First, if you absolutely must have Bitcoin exposure inside a traditional stock brokerage account and can't or won't use a crypto exchange. Second, if you're trying to take advantage of specific tax benefits associated with ETFs in your region, like in a retirement account. And third, if you just don't want to deal with the learning curve of self-custody and crypto wallets, that's pretty much it. If you're holding BITO with the expectation that it will match Bitcoin's performance 1-to-1 over several years, you're setting yourself up for disappointment. It won't. The math of futures drag is working against you. Alright, now for the really dangerous one. BITX. The 2x leveraged Bitcoin strategy ETF. This is the one that can wreck your portfolio if you don't understand it. BITX aims to deliver double the daily return of Bitcoin. If Bitcoin goes up 3% in a single day, BITX is designed to go up around 6%. Sounds amazing, right? A way to supercharge your gains. And it can be, but only for extremely short time frames, like a single trading day. Here's the massive problem. Its leverage resets daily. This daily reset creates a destructive force called leverage decay or volatility drag. When the market is choppy, moving up one day and down the next, this ETF will bleed value, even if Bitcoin's price ends up right back where it started. BITX is not a long-term investment. It's not even a medium-term hold for a week or a month. It is a tool for day traders. Period. If you hold it for longer, you are essentially just donating your money to the market. So let's be crystal clear about who should never, ever touch BITX. If you don't watch the charts every single day, if you don't know how to use a stop loss to manage your risk, If you don't understand what volatility drag is, or if you aren't prepared to close your position at a moment's notice, then BITX is not for you. This ETF can and will blow up your account faster than you can imagine. People get lured in by the promise of doubling their gains, but what it really does is multiply the cost of their mistakes. It's a high-risk trading instrument, not an investment. So, BTC versus BITO versus BITX, which one actually wins? It all depends on your goal. If your goal is long-term wealth creation, BTC wins, hands down, every single time. It's clean, efficient, and has no roll costs or leverage decay. It's the pure asset. If your goal is medium-term exposure inside a brokerage account, BITO is an acceptable but suboptimal option. You have to accept that you'll likely underperform the real thing over time. And if your goal is to gamble on short-term price movements with high leverage, then BITX is your tool. But remember, you're not investing, you're trading with a grenade. Use it only if you are an expert who knows exactly what you're doing. So what is the best long-term strategy for the average person who just wants to build wealth simply and effectively? It's this: hold real BTC. Buy it consistently over time, a strategy known as dollar cost averaging. Ignore the daily price noise and all the market drama. Do not touch leveraged products like BITX. And don't try to outsmart the market with complex futures-based ETFs like BITO, unless you have a very specific, short-term reason. Your main job as a long-term investor is to avoid unnecessary costs and performance drags. BTC gives you the purest exposure to the asset with the fewest moving parts and hidden fees. Now that you know how to avoid these common traps, you're already ahead of most people. But if you're serious about building real wealth and not just playing financial casino games, you need to know what to do next. Watch the next video on my channel right now. Don't put it off. It will show you the exact strategies to use to push your financial journey to the next level and give you an edge most investors will never have. Click on it now.